How do
Yep.
you,
Yeah.
in your like personal risk management portfolio, identify a top? Are we there? And if we are, or when we are, how do you plan to sell?
I'll be honest. So I'm kind of planning to approach this going forward bear market differently than I have in the past. In the past, it's been okay, what are signs of froth? Whether it's like Trump Melania was a great one for this last one. For then, just a lot of like the NFT stuff was really stupid.
Yeah.
The Pepsi Wag Me
Yeah, yeah,
trend
yeah,
was a good one from before. So you're just like, okay, like this stuff is just stupid, stupid. And I'm embarrassed to be a part of it, and I'd rather hold cash and buy back lower. I think those ones are easier. I think post some of this stuff, it's been a lot harder. Like I think you could point at a lot of DATs and say that that's like an extreme froth signal. Like I think a lot the fact that stock market speculators were willing to put like 200% premiums on like a 2-3 week period on some of these DAT vehicles, like that's really 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 heavy froth. With the flip side, they're not forced sellers anytime soon. Like those are just like broken vehicles that like trade into a discount at some point. It's like GBTC is the best sort of like historical example there. It's not necessarily a ton of selling pressure. You still have a lot of onboarding flow through the ETF. And so even with like a bunch of froth like that, I have not been willing to sort of like sell risk assets here to that point. So I do think there is a point towards, I have longer term concerns about dollars. I worry that if I were to give up my Bitcoin stack, it would be like really just hard to time the catch. Like, what am I playing for? Am I playing for like 85, 90K? Like, am I playing for like 70, 75K? That would be a great swing trade if you could hit it, which I kind of, December, March. But I think the downside of getting out of position on Bitcoin scares me a lot more than holding through like even like a 50% drawdown, as crazy as that sounds.
I don't want to ask like if you don't want to talk about port allocation, you don't have to answer. But you definitely April, May, you were posting a lot about spot BTC. You're not as much anymore. What percent allocated are you to spot Bitcoin?
Yeah, that hasn't changed. I haven't really made a large trade since buying a bunch more stuff in maybe like a month ago. So I'm like probably like 50, 60%. No, no, I guess a little less, like 40, 50% spot Bitcoin.
That feels
Just
proper.
like just a big Bitcoin stack. And then I think beyond that, there's like a bunch of hype, a bunch of Robinhood, a bunch of SPX, and that's sort of like the longer term hold portfolio. And then the shorter term, like when I re-entered last month, I bought a bunch more hype. Dude, the hype PT Pendle K hype trade is fantastic. I'm very appreciative of people that are so bullish Kinetic that they're willing to like all in the YT. From Kinetic's perspective, it makes perfect sense because you've already onboarded the full subset of people that are like, okay, like let's say you have a subset of hype holders. They're like, okay, these are the people that hold hype and want to earn yield on hype. Then you have a subset of them that are like willing to earn stake in Kinetic, and they like Kinetic, they want to stake in Kinetic, they want to get K points, they're okay with all of like the risks and the staking downsides. When they launch, they onboard all of that half like immediately, right? Then there's some half of people that still hold hype, they want to get yield on hype, but we've been around the block. I know if a website wants you to click a button for 2% with a 7-day staking on queue, I know not to click that button. Like the downside, you're going to lose way more than 2% on the time that you want to get out for a 7 day. So I just don't, I had all my hype and I was just unstaked because I was like, I'm not planning on selling it. But if I wanted to, that optionality is worth way more than 2%. But when Kinetic does the Pendle partnership and they launch KTYTs, it's so smart of them. They juice the YTs because then you get everyone who believes in them already. They jam in the YTs. They get a lot of points for Kinetic. It's a fair trade. But then because the PT hype APR gets so large and it's kind of like considered, if you're okay with the smart contract risk and if you're okay holding it through November, it's kind of free money. Everyone who hasn't converted already, so all the unstaked hype is now tempted to slam through the PTs to get the free yield. And so now you've converted the set of people that had specifically opted out from staking in the first place. And I missed it when Athena did that with their PTYTs, but then now that this one is done, and I was like, oh, that's what's going on. You convert all the people that hadn't converted. So I did that. I was sitting on stakes. They're going to offer me 15% over 3 months. It's like 3% real
Oh.
over 3 months. I was like, sure. So stake and PT and jam through. So my recommendation is to take the free money on the PT side. I respect people that are YOLOing the YT side, and it's worked out for other trades in the past. So it could be just everyone wins. But I just know if you're holding hype and you want free money, go jam the PTK hypes.
it feels like all these little niche arb opportunities are completely largely overlooked and missed by like crypto Twitter broadly. And maybe that's just
Yeah,
how market.
that's not even like an arb. That's just
Yeah.
a really like that's a really virtuous. Kinetic wants to grow. Everyone wants to get points. You can just
Yeah.
participate in it. I do agree that generally, there's just no incentive to talk about that stuff, right? Like they're usually kind of low capacity, or you'll get diluted. And so that's why all the farmer chats are the most lonely chats. Because you have like degen chats and
Yeah.
perp trader chats and meme coin chats are all very, very close friends, and the farmer chats are all kind of like looking at each other like, don't come dilute me, bro.
That's hilarious. Going back to the dad thing, like really quick. I mean, I think it's the most uninteresting meta we've ever had, and so I really not in the mood to like spend a lot of time on it. But I think the flip side of it feeling very frothy, which it does, is that you see Kyle Samani is about to slam $1.65 billion just t-whopping into Soul and go Tom. He's already trying to. First order of action is I want to debate Tom Lee, and he's about to go on CNBC and just go sailor mode, and then it's really easy to get bulled up, especially when there's a couple decent Solana on-chain narratives at the same time. And so there's always like two sides of the coin there, you know?
I would argue Tom Lee has already kind of fucked it up. If you're gonna Sailor it, you can never ever be bearish. You can never like. Do you remember when Sailor even tweeted that one time like if you don't hold Bitcoin, you don't need anything, or so it was like some like inverted like logic, and everyone's like, what the fuck? Like delete this tweet right now. I think if you're gonna figurehead like that, you've just got to be purely delusionally bullish. And I kind of dislike Tom Lee posting like 10% pullback charts. It's like, what are you doing, bro? You're like you're trying to send this asset up 100%. Why are you like trying to scalp 10% on the daily? A lot of DATs are sort of just a transitioned way to do the sort of story trade where you sell a bunch of treasury tokens, get
Insane.
unlock dollars, rip it into the public. Hey, if it works, it works. I'm less scared of them than some other people are, just because again, they're going to trade at discounts and just be locked tokens for a very long time. It's not like a bunch of sell pressure going to like spin around. And while they're telling us what they're going to buy, you might as well buy it before them and sell it after they're done buying it. Like they kind of want you to do that anyway. So it is a very weird meta though, where yeah, you can't really call a top on it because you don't really know which ones they're going to launch next. It's just the thing I dislike about it most is I think it's taken away marginal buyers who would have been buying things like whether it's Hyperliquid or Aave or coins that are not necessarily Bitcoin or ETH or Sol, but they would have pushed the risk envelope out into more things that we think have value. And instead, a lot of that risk envelope got pushed out by these DAT companies.
So it's a good take. I think you tweeted about this that it's definitely hard paraphrase here, but it's replaced like a lot of the alt season stuff because you're people look around, they're like nothing's ripping in crypto, and then the fucking institutional boomers like no, the treasury companies are, which is fucking bullshit. But do you think these institutional flows make it back on chain?
I think through pass through effects of just like, perp traders on ENA getting richer and then bringing that on chain.
Yeah.
I think you're probably converting people at the very least, somebody that buys the hype DAT because it's going up, hopefully looks into hype a little bit and realizes what it is and comes on chain. But no, I don't think, I think we're fundamentally pretty lazy and efficient creatures. And so if my biggest concern is that I think it stopped the hardest friction, which is learning how to come on chain. Like, oh shit, there's this area of capital, and we talk like native markets being launched somewhere that I can't get access to unless I cross these bridges and unless I go through Coinbase and I bridge on chain. And now the fact that it's been brought into their TD Trade or their Fidelity account, I think that's the worst part to me is there's just now no pressure. They can just sort of pick between a subset of alts on the stock market.